Hey everyone, welcome back to FX Videos, the podcast where we break down the currency markets, trade smarter, and stay ahead of the curve. I'm your host, FX Videos channel, and today we're diving into the Forex market action from January 8, 2025, and what it means for the next trading day. Whether you're a seasoned trader or just getting your feet wet, this episode is packed with insights to help you navigate the markets like a pro. Let's get into it. Alright, so January 8, 2025, was a wild day in the Forex world. The markets were buzzing with activity, and there were some key moves that caught everyone's attention. Let's break it down. First off, the US dollar index, DXY, had a rollercoaster session. It started the day strong, buoyed by better-than-expected jobs data from the previous week. But by midday, the dollar lost some steam as traders digested comments from Fed chair about potential rate cuts later in the year. The DXY closed slightly lower, and that weakness spilled over into major pairs like euro to US dollar and pound sterling to US dollar. Speaking of euro to US dollar, the pair saw a nice bounce, climbing about 0.4% on the day. The euro got a boost from stronger German industrial production numbers, which came in above forecasts. Traders are also keeping a close eye on the ECB's next move, as inflation in the Eurozone continues to cool. Over in the pound sterling to US dollar camp, the pound held its ground despite some mixed economic data. UK retail sales were softer than expected, but the Bank of England's hawkish tone in its latest minutes kept the currency supported. Now, let's talk about the US dollar to Japanese yen. This pair was a standout on January 8, dropping nearly 1% as the yen rallied. The move was fueled by safe haven demand after geopolitical tensions flared up in the Middle East. Plus, there's growing speculation that the Bank of Japan might finally tweak its ultra-loose monetary policy in the coming months. And let's not forget the commodity currencies. The Australian dollar to US dollar and NZD/USD both edged higher, thanks to a weaker dollar and rising commodity prices. Copper and gold were up on the day, which gave these pairs a nice tailwind. So, that's the snapshot of January 8. But what does it all mean for the next trading day? Let's dive into the forecast. Alright, so what can we expect for January 9, 2025? Here's my take. Starting with the US dollar, I think we're going to see continued choppiness. The Fed's mixed signals are keeping traders on edge, and until we get more clarity on the rate cut timeline, the dollar is likely to remain under pressure. That could mean more upside for pairs like euro to US dollar and pound sterling to US dollar. For euro to US dollar, I'm watching the 1.1250 level closely. If the pair can break above that, we could see a move toward 1.1300. But keep an eye on any comments from ECB officials. They could throw a wrench in the euro's rally if they sound too dovish. As for pound sterling to US dollar, the key level to watch is 1.3000. The pound has been resilient, but if UK data continues to disappoint, we could see a pullback. On the flip side, a break above 1.3050 could open the door for a run toward 1.3100. Now, let's talk about US dollar to Japanese yen. This pair is at a critical juncture. The yen's rally has been impressive, but I wouldn't be surprised to see some profit taking on January 9. If the pair can hold above 140.00, we might see a bounce. But if it breaks below that level, things could get ugly for the dollar. For the commodity currencies, I'm cautiously bullish. The Australian dollar to US dollar and NZD/USD both have room to run, especially if commodity prices stay firm. But keep an eye on risk sentiment. If geopolitical tensions escalate, these pairs could come under pressure. And finally, don't forget about the economic calendar. On January 9, we've got US CPI data coming out, and that's going to be a huge market mover. If inflation comes in hotter than expected, the dollar could get a boost. But if it's softer, we could see the dollar extend its losses. So, there you have it, my forecast for January 9, 2025. As always, stay nimble and keep your risk management tight. The markets are unpredictable, but with the right strategy, you can stay ahead of the game. Before we wrap up, I want to leave you with a few trading tips for navigating this volatile market. First, stick to your plan. It's easy to get caught up in the noise, but having a solid trading plan will keep you grounded. Know your entry and exit points, and don't let emotions dictate your decisions. Second, keep an eye on the news. Geopolitical events and economic data can move the markets in a heartbeat. Stay informed, but don't overreact to every headline. And finally, diversify your portfolio. Don't put all your eggs in one basket. Spread your risk across different currency pairs and asset classes to protect yourself from sudden market swings. Alright, that's all for today's episode. If you found this breakdown helpful, don't forget to hit that subscribe button and leave us a review. It really helps the show grow. And if you're looking for more Forex insights, check out our YouTube channel, where we post daily market updates and trading strategies. Just search for FX videos and hit that notification bell so you never miss a video. Thanks for tuning in, and until next time, happy trading.